One of the most frequent questions that I receive is how do you choose what real estate market to invest in? And this applies to both new investors as well as seasoned investors who are looking to allocate their money to new areas that may have a better return on investment. Well, you're in luck because in this video, I interview Arley Wolf, who has decades of experience in the real estate space and has created a program that consumes lots of data to identify which are the hottest markets. My name is Ariel Herrera with the AnalyticsAriel channel, where we bridge the gap between real estate and technology. Please subscribe to this channel if you haven't already if you want the latest on tech news, data, and real estate. Within this interview, we're going to be covering three main topics, and this includes the three investment philosophies that you should be following, benefits of using leverage in real estate, and then how to use REMAP, which is the real estate market analysis program that Arley has created to identify hot markets. All right, let's get started. Hey everyone, today in a Tech and Real Estate podcast, we have a special guest, Arley Wolf, who's going to be giving us an overview of REMAP, the tool that he's built to help real estate investors. Welcome, Arley, to the channel.
Hi, Ariel, and thank you so much for inviting me. I love what you do with your podcast. You've done a lot of them, and they're great materials, great contents. I've learned a lot from them. Thank you.
Thank you so much. I really appreciated you reaching out several months ago regarding a tool that you had already built, and you were looking to expand upon it and have it as well as a full-blown web app that others can use too. But before we get into the tool itself, I would love the viewers to be able to hear a little bit more about you and your background.
Absolutely. Well, I'll start with I was raised in a farming community in central Washington, Mattawa, Washington. And my dad was a farmer there. He always had this dream. He's actually a blue-collar worker. He's a pipe fitter, but he always had this dream to be a farmer. And as I matured and grew up, I come to realize that it wasn't the farming, because it's a lot of work, that he was really interested in. It was owning land, and the means to doing that is to farm. And so on that little farm, he taught me a lot of life lessons, and some of those life lessons were really investment lessons. And I'm sure he thought, went in one ear and then out the other ear. But when I needed to pull these principles that he taught me, I was able to do it. So I'm going to share with you three principles that he taught me. First, he taught me, he said this: son, buy land because they don't make any more of it. And that's I didn't really know what that meant. I thought that was kind of silly at the time. But I think what he was teaching me was that the principle of supply and demand. And that's very important what we do as real estate investors. The second principle he taught me was don't work hard for your money, make your money work hard for you. And again, there's something deeper in in that. And what that is the principle of appreciation and compound interest. And again, very, very important principle. And then the last thing he taught me was don't work hard, work smart. And, he was born in 1920. And I just remember that in probably 80, 82, when the computer just started to go out, my brother and I were the first ones in the whole town of 800 in Mattawa to have a computer. And he understood. He was forward thinking enough to understand the importance of computers. And from there, we learned by playing video games and other things, the important computer. And then in 2005, I developed REMAP, and that was the first version. And I did it out of necessity. I was a new investor, and there were a lot of ideas, thoughts, and recommendations on where to invest. I didn't know where to go and who to believe, and I knew everybody was honest. It's just that they had their own perspective. So I'm think probably like you, I thought, wow, even in 2005, I I developed REMAP, which is a real estate market analysis program, and it's like no other. Especially back then, that was before Zillow or
Yeah.
Redfin or anything like that. And on my website, I do have a little bit about what it looked like then. It had two parameters. It had two key indicators, and that was volume of sales and average sales. And I mined it from this company called Melissa Data, and it just drove them crazy because I pulled all of the zip codes across America for those two pieces of data. And with that, I use that to make financial investment decisions. And I applied those principles. I'm going to go back to those three principles over and over again because, again, it's important. But as through the years, I've used the old program, which I had to let go for a while because it cost me $100 a month, and my wife and I didn't have $100 a month. So after a couple of years of it, she said, "You got to cut this out." And so I cut it out. But I learned enough, and I knew how to go and manually, download all the data and do all of this stuff. And it just took so much time. It's just, it broke that third principle, which is work smart. So through the years, I think my first home I bought in 1998. That's my residence in California. And then in 2005, like I said, I created remap.com. Since then, I've purchased and sold a lot of properties. I've flipped. I have bought and held. I have land. I have commercial property, and it's all been my decisions have been based on this model and this program, and and so that's a little background about me.
Thank you so much for sharing that. Those philosophies that your father instilled are invaluable. And I know you had mentioned that these principles tie really closely to investing and some investing tips. Would you be able to explain a little bit more there?
There's many ways to invest. And a lot of people have been doing this very successfully. So I'm just going to show you one thought and just the principle that I apply. And my kids are getting to the age that they're asking about investment. Dad, hey, how do you invest? As they were growing up, what I used to do is say, I would get the check, the rent checks, and I would show them and I would say, look how hard I'm working for this. And then I would sign it and I would deposit it. And, and they would just go, that's so boring, when they were younger.
Yeah.
But now they're starting to think, oh, well, maybe there's something to that. So I believe that that you could manage your real estate portfolio similar to how you manage your stock portfolio. And what I mean by that is stock is very data driven. You buy a stock based on its performance. You wouldn't go and just pick a stock out of nowhere and buy it in hopes that it would do well for you. Once you invest, don't stop there. Continue to watch, continue to trend. And what I do with my stock portfolio is I go and I ask an expert and I look at the trends, and once a year I make just a minor adjustment. Now you might not do that in real estate; it's a longer term, but that's the philosophy. What's great about real estate is that you're leveraging your investment. Yeah. And Archimedes said that give me a lever, and that's your loan, right? And a place to stand on, that is the real estate property, and I can move the world. And so real estate is sort of like that, in America anyways, you don't have to put out 100% capital. I mean, if a home is $100,000, you don't have to put out $100,000 to purchase that home. All you have to do is put down 10 or 20%. But the
Yes.
beauty of it, here's the leverage, is that 10, or let's say it's 20%, when that property appreciates, you're not just appreciating 20% of your investment, it's 100% of the investment that's appreciating. And so these are those first two principles, or actually these are the three principles. And these principles in particular, is don't work hard for your money, make your money work hard for you. Let the appreciation and the compounding interest and just the tenants pay for your property. Those are all ways to make your money work for you. And so here's the next thing, is just, this is how I think, but it's just beautiful. It's a beautiful thing. And that is the rule of 72. So you've probably heard of the rules of 72. What that is it's really an investment. It's a rule of thumb. And what it says is that it helps you kind of, it just approximate how long it takes for your investment to double in over time. And the formula is you take 72 divided by the interest, and the resulting, what that comes out to be is the how long it takes, the years that it takes to double your money. And so, for example, take 72 and you divide it, if the appreciation, whether it's in the stock market or in real estate, is 8%, okay, compounded, then 72 divided by 8 is 9. And, in 9 years, you double your money. And so the rule of 72, I often also refer to, is compounding, in real estate anyways, is compounding interest on steroids, right? Because let's take an example. You buy, just for simplicity, you buy a $100,000 house. You put down $20,000. That secures that property. And if that property appreciates 8%, that property will be worth $200,000 in 9 years. $200,000 in 9 years. Now, if you invest in the stock market, which you should do, that $20,000 becomes, what you gain on that is $20,000. But in real estate, what you gain is $100,000. 5 times your original investment, by the way. Now, isn't that beautiful?
Yes, definitely. It's super incredible how you can use leverage to really empower you in your investments. And especially if you're someone who's going the owner-occupied route, you could put as little as 3.5% down, which is pretty incredible.
That's a great way to do it. And sort of like stocks, you can move stocks without having capital gains. You can do that in real estate with 1031 exchanges. In fact, I did not too long ago three sales via 1031 exchange of 3 properties, and I moved it into a commercial property with absolutely no tax, which is great. And then this last thing I leave with you before we go into the showing how remap2.com works is that, the secret is that, and people don't believe this, is that there are markets across the United States, not just in one location, where over the past 10 years, you have appreciated at least 8% per year. There are markets over the past 20 years and the past 30 years, if you look at the history, that have appreciated by that much, which means that there are markets where if you can find the money to enter into the market, you will 5 times your money, your initial investment in 10 years, over 10 years. So you can see how that works.
Yeah, very powerful. And that's actually my first time hearing about that 72% rule. But at this point, would love to be able to transition over into seeing REMAP2.
All right. So this is REMAP2. It's a real estate market search engine like no others. And how I know that is I've been looking for a tool like that after what I developed in 2005. So it's been nearly 2 decades that I've looked. There are a lot of good programs and applications and things out there, but there is nothing like this. And how it works is, the database for this is huge. It's millions and millions and millions of lines of data. There's, 10, 15 market indicators, as you'll see from here that we're filtering through. So, don't work hard, work smart. Well, this is one way to work smart. And what we do is we say, and again, I'll go back to stock market. I'm looking for, like in a stock market, I'm looking for volume. Well, you can do the same type of thing here. I'm looking for price range. You can do the same type of thing here. And we're going to take, on our homepage, we have some examples. And we're going to take a look at this third example here, how to search for the highest appreciating buy and hold markets, right? You can, later on, you do this example, how to search for entry-level flip markets. And then, if you're just really interested in where the really rich people live, then yeah, there's a little search for that just for fun. But here are just some indicators that we're going to use. So we're going to look at property types, and you can look for, condos, all kinds of different properties, but we're going to concentrate on single family, residential, region type. And that is, there's a lot of data that is by metro region, by state, by county. We're going to focus on place and city. So it'll return cities. The time range we're going to look at is 10 years because this is a long-term buy and hold. We're not going to look for 10 years in the future. We're going to look 10 years in the past. And we're going to say, well, what are the areas that have appreciated the most in 10 years? And then we're going to look and get this. We're going to look for areas that have appreciated 250% or more over 10 years. This is not 100%. We're talking 250% or more. All right. And so I'll run this search. It's property types, and here are all the property types. And we're going to go with single family, residential, region type, and you can do all. That's a good one to start with. But there are other region types. We're going to go even down to zip code and neighborhood. So it gives you a lot of resolution there. But we're going to go with place and city, state. Let's just look at all states. We can look for Florida. We can look for California, Ohio, just anywhere. But we'll do all. And then the time range. And I've got to move this. The time range, let's do 10 years, like we said. And then you search. And in here are all of the indicators. And you can see there are many indicators to look for. Month to month, year over year, appreciation, day on the market, all kinds of things. What we're going to do is we're just going to focus on price up, median sales, percentage appreciation or depreciation, because sometimes you may want to look at a market that's depreciating. And we said, what did we say? 250%. We'll throw that in there. And then homes sold, I'm going to throw in there 100 because that's what the example says. And the reason I put 100 is what I've found over time is that if you can find markets where there's only 1 or 2 sales, but those are very, very small. And that's maybe what you want to do. But I found that, sometimes you go into those markets and you don't have a lot of selection of who you work with, the team that you build, because there's only one realtor in the town type of thing, or one property manager. So I'd like to go with 50 or 100 homes sold to avoid those very, very tiny market. And it's thinking. Now, because we're going through so much data, it takes it about a minute or two to think. So what I've done is this is the results. And again, we'll just go back, and then we'll go back and we'll see that when it returns in a minute or two, it'll be the same results. 250%, 100 homes sold, and all of the information is the same. So, and here is what is returned. We have 30 cities that have returned. And if you look at that, California, oops, hold on, let me do this. Oh, and you can sort by each field, which is great, and I'll show you why.
Yeah.
There's Oregon, Idaho, Cleveland, if you can believe that. Florida, there's lots of Floridas. Look at this. There's Arizona, but there are a lot of Floridas in here. And that might be interesting to you, Ariel, since you live in Florida, West Palm Beach, all of these, St. Petersburg. Now you can kind of refine your search. Usually, I've started with a very refined search, like 250%. There's not a lot of properties like that. But you can start broader, say 100%, and you'll have hundreds or thousands of returns. And then you can go into let's say homes sold, and here's a check. So there's the minimum amount of homes sold. We said 100, and anything above 100 is good. The other thing we'll look at is median sale price. So there are homes that you can buy with markets that you can buy in that median sale price is 119,000 that have appreciated, 250% over the last 10 years. Now, unfortunately, past performance doesn't guarantee future returns. You've heard that, and that's true. So you still have to do some research, and you still have to understand why. But this gets you to, wow, that's done great. Maybe it'll do the same in the next 10 years. Let's go and do some further research on that. And I'm going to go with Bend, Oregon. I can then select any one city, and then I can run a trend. And there is the trend for Bend, Oregon. And you can see that 10 years ago in 2012, you can buy property in Bend, Oregon for $195,000. And as of February 2022, that market has appreciated to $785,000.
Wow.
That's even more, I think, than 250%. But the other thing that's very interesting about this, and this is similar to a graph that I would have created in back in 2005. You can see volumes of sales, right? And now not every region is going to show it like this, but this is very pronounced. Take a look at, let's see, that is right here is June, 395. That's when the highest volume, right? In June, that's what everybody in real estate investment tells you, is that in the summertime, you're going to have higher volume, right? And those higher volumes, August, September, you have, that's the peak within that year, 439,000. Now, if you had bought in December in that market, it's 348,000. And you can see where there's a dip in volume, there's also a dip in price. And so just by waiting, I don't know, till December as a buyer, you can knock off $20,000-$30,000, potentially, maybe even more, depending on some markets. And again, this is a great example because it's very pronounced. You can see it. The other feature that we have the ability to graph all of these, all of the results on a Google map. And to me, that's very, very helpful. One of the places that I've invested is in Lancaster, California. And I know what drives the appreciation there. It's a bedroom community of Los Angeles. It's only about 45 miles away. So a lot of people go there because they can't afford to pay 2-3 times the price in Los Angeles. But you can see the proximity of Lancaster to a major metropolitan, and you can see why, maybe that is appreciated. One of the reasons. There are many other reasons. But to load the map, what you do is you go into, if it's the first time, you're asked to set up an account, and it's real simple. It's just your name, your email address, and a password. Once you've done that, you can go and you can map it, and then you can kind of take a look at the areas that appreciate it. Now, all of Florida appreciated, right? All of Florida appreciated, but these are the areas that have appreciated the most. And why is that, I wonder? They're coastal areas. People love to live, although there's water surrounding Florida, they love to see the water, I think, and that's why it may have gone up.
Awesome. So informative, being able to quickly plot which cities have had the most appreciation. In terms of use case, this would be useful, I'm assuming, for someone who's looking to go into a new market or someone who's even trying to understand the market they're currently in better, correct?
Yeah, I think it's very useful because it allows you to tailor your investment to what your needs are. When I first started investing, what I needed to, back then I lived in San Jose, and it was just the market. It was too capital intensive. I mean, it costs so much money, $600,000, $500,000, $400,000, whatever it was back then. I said, I just don't want to put all my money in one property and then have something happen to it. So what I decided to do was take the money that I had and go into a market that was, I purchased homes 10 years ago, 12 years ago for $120,000, and they're $400,000 now.
Wow.
And rather than buying a home in San Jose back then for $500,000, I bought 4 homes for $120,000 to $200,000 each, knowing that there's a good chance that they will appreciate well. And the other thing I look for is, when I said, well, why do some people just invest for cash flow and some people just invest for appreciation? Why do you do that? Why not look for markets that have both so that you can sustain your investment with the cash flow and then, make 5, 10, 20 times, your initial investment. And so that's kind of phase 2. So this right here is actually phase 2 because phase 1 was in 2005. Mm-hmm. This is phase 2. There's going to be a phase 3 and a phase 4 of this website. And I'd love to work with you or others because I've seen one of your podcasts and I know you can use APIs to pull rent data.
Yeah.
I would love to put rent data in here. That I just haven't been able to do that yet. But with the rent data, then you can really search for, hey, where is it appreciating or potentially appreciating, and where do I actually get good cash flow so I can maintain my properties and have a little extra. But that's for those, if you're an entry level investor, look for areas that are low cost to enter, but good potential and mm-hmm. good cash flow. If you are, so me, if I want to buy a property now, I go and I buy cash, and the really low cost area, there are some risks to it. And the risks are, well, maybe it's a little higher crime, or maybe the neighborhoods are not great for schools, or whatever it is. Those are risks. They're risks worth bearing because you can upgrade. Remember that 1031 exchange, 10 years, upgrade into a better neighborhood, a little better, whatever. I like to go into neighborhoods that have good school district or medium school district that are kind of established, a little newer homes, just because at this point in my life I can. Mm-hmm. Did that answer your question?
Yeah, it did. And it also
Okay.
gave a little bit more use cases too. This
Yeah.
tool is super useful. Very excited to see for the future where it can go as well. And if someone wanted to use it today, is it currently free to go onto REMAP2 and use the tool?
Oh yes, it's absolutely free, and yeah, because it's really the long term. What I really want to do is I do really want to share my share my successes, and also just the tool, just make it open for everybody. For my kids, I'm hoping that
Yeah.
they will use it. Um, um, so if we go to let's see here, market. See, in this market, there's market simulator and market game. Those are not ready yet. But that's what I want to do, is I want to create a market, and I have the foundation for it. I have the black box that will allow me to do that. But eventually, I'd like to do a market simulator, and then with that market simulator, allow new investors or seasoned investors to go in and say, "Hey, I know what's happened in the past. I don't know what's happened in the future. I'm going to play this game. I'm not going to, and so that I can make decisions and react to it and see, how I do. And it'll be a contest. Let's see who can make the most money. It'll be like this, something like this. Here's a little foreshadowing. Your rich uncle has passed away and given you $1 million. You have 10 years to invest that money. What are you going to do with it? And then you go into the market game and you figure it out, and you try to best everybody else. And you learn, excellent. And you learn as you go. But it costs nothing. It's available to everyone, and I hope you use it. And so my name again is Arley Wolf. This is remap2.com. And you can use it on your iPhone, your iPad, your computer, Mac or PC. If you have any problems with it, or if you have suggestions, here's the other thing: is hot picks. What we're trying to do is we want to know, when you use this, what you think your hot picks are, and we'll put it on here. We don't have anybody yet.
Awesome.
We have my hot picks right now. You can go in there and take a look at that. What we encourage people to do, because I want this website to be a lessons learned, lessons shared, an educational website where we, the users, are kind of the think tank. And so as you go and research, and you think, oh, this is really a great place to invest in your hot picks and in my our hot picks, there's a link to my business Facebook page. Just go in there, or you can email me and tell us, what parameters you use, why you think that market that you've landed on, that city or multiple cities would be your hot pick, and we will take a look at all of them, and we'll pick the ones that really merit the kind of more dialogue and discussion. And here's the secret: if you get in early, you'll get in there. But as that fills up, we'll have to be a little discriminate on who we'll put up there.
Yeah, totally understandable. Well, this has been terrific, Arley. Not only have you provided a platform that bridges data together to help new as well as seasoned investors choose particular markets, but you're also creating a community and sharing knowledge through these other areas within your website, which I greatly appreciate. So thank you so much for your time, Arley. And once again, your email, if people need to reach out to you, what would that be?
Email is Arley, ARLEY, at remap2.com. But please also copy Arley E. Wolf at sbcglobal.com for now, because I'm having problems with the other email. And that's ARLEYEWOLF at sbcglobal.com.
Excellent. Thank you so much.
Thank you. Really enjoyed this morning with you.